Hey, 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 hey. Hi, everybody. So I am going live on Instagram and Facebook, killing two birds with one stone, I guess. Anyway, hi. Hi, everybody. I hope everyone's doing well. I'm in New York, so we are having our fourth snowstorm or snowfall in 2 weeks. But as someone pointed out during my complaint, got to be thankful because, folks in the South, especially Texas, are having a really rough time. So, my hearts go out to them. I hope they get relief soon because, being in a home that's 40 degrees is not fun. It's not fun at all. I remember those days when I was growing up in our home and we ran out of oil. And it would always happen during the coldest night of the winter. So my parents would have us all bundled up in coats and stuff until the oil man came, later on that night or first thing in the morning. So I know that is not fun, and they've been going through this for a couple of days now. So, and there's been some deaths. So my heart goes out to them. I am not going to complain about our fourth snowstorm because it's really nothing in, comparison. So if I keep looking up and down, that's why I have two cameras on, one my IG and one for Facebook. So keep the people of Texas in your prayers, your thoughts, and hopefully we'll get to a resolution soon. But anyway, I am Dr. Randi B, MD, board certified pediatrician and financial wellness expert, where I provide your RX to wealth and financial well-being through my coaching programs, my speaking engagements, and my #1 best-selling book, Ladynomics, A Woman's Prescription for Wealth and Financial Well-Being. And for new folks who may be following me, you're probably like, well, how is a pediatrician in finance? Well, before I became a doctor, before I made that switch, was almost 20 years ago. I can't believe that time has, I can't believe 20 years has gone since I made that decision. Like September 11th happened 21 years ago. I lost my father in 2000. So I made my decision to switch from investment banking to medicine around this time. This is when I started thinking about it. And then, jumped into the fire in the year 2002. So it's been 20 years. So yeah, so after, I worked in the financial industry, Wall Street, for 14 years. After those events, I decided to make a switch into medicine. I've been an attending. An attending is a physician who's pretty much finished with their training. I finished that in 2012. So I've been in attendance since 2012, 9 years. And then, but about 3 years ago, 2.5, almost 3 years ago, I decided to kind of merge my two backgrounds together. Finance with wellness, the doctor part, wellness, financial wellness. See, got it? Finance, wellness, put it together, financial wellness, because it's so important to have your finances and to have your financial life. It's important to have, that it's healthy and it's doing well, that you're doing well. Because if you're not financially healthy, that can lead to stress and anxiety and depression. And we know that a lot of folks have been going through hell this past year with this pandemic. This pandemic that's just about a year old. It's about a year old. So, a lot of individuals are having a hard time financially, and it's affecting their health and their well-being. So my passion is to really help individuals along that journey to financial wellness so that they're more prepared for some of these catastrophic events, or just to plan for your future and to take care of your loved ones. But anyway, so I am here today to talk about taxes. Woohoo! So IRS officially opened the tax season this week. I think it was February 16th. They're not extending the tax season. Last year, due to the pandemic, they extended it until like July, I believe. It was like July 15th or 16th or something like that. But they opened it up February 16th. We still got to file April 15th, okay? So, I was going through and seeing what significant changes took place. Now, the major tax overhaul was back in 2017. Massive changes. The main big change for me being, like in New York, was the SALT deduction. The SALT is the state and local taxes deduction that, we used to be able to take like an unlimited amount. That was reduced to $10,000. So in the past, I used to be able to take $26,000 in like deductions, and that got reduced to 10 grand. So I wasn't happy about that. So let's see. Hopefully, maybe, we'll never know what this new administration is going to do. It's brand new. It'll be nice if we'd be able to take, get that deduction back. But really not a lot. So I'm going to be reading off my little notes here. I try not to read when I do these lives. I really try to do it off the cuff. But taxes and giving information on taxes is very delicate. So you want to make sure you are giving the right information. But yeah, not a lot of changes. Main thing is the standard deduction looks like it's gone up. And it always do. Every year usually goes up a little bit. So that's gone up. Charitable deductions, if you are, if you contribute to charitable deductions, charity. Now, because of the CARES Act was the act that took place last year in, as a result of the pandemic to help with, financial relief, that sort of stuff, tax relief. So charitable deductions, you could deduct up to 100% of your AGI, which is your adjusted gross income, which is nice because I think in the past you could only deduct up to 60%, but you could deduct up to 100%, which is great. And again, everything I'm telling you, you go back to your accountant, your CPA, and review this with them. Go over it line by line. You should understand everything that's going in your taxes. Any questions you have, you definitely, should seek out a professional's help. Like I was an accountant. I have my master's in taxation, if you could believe that. I have my MBA in taxation, but I got my MBA in 1998. All right, so go to someone who, I have an accountant, I have a CPA who does my taxes. So yeah, charitable deductions, you could deduct up to 100% of your adjusted gross income. What else? Okay, so there was a lot, last year we did have the CARES Act. There were a lot of items that was, that resulted from that. We got, stimulus checks. We've had, I think, 2. Yeah, we've had 2 so far, I believe. We had the one from last year, and then there was the recent one for about like $600. They're working on a third one. And the money that you get for your stimulus checks is not taxable. Okay, it does not count towards your taxable income. Okay, you get that? IG, Facebook, if you got a stimulus check, you do not include that into your taxable income. You do not pay taxes. They kind of look at it as advance on your money on your refund, but in any case, you don't. They consider refundable tax credit, but you do not pay taxes on that. If you are a small business owner and you got PPP loans, and you can apply for PPP loans. If you are a small business owner, make sure you get those applications in. Okay, I submitted mine last month. I'm still waiting. But and if you applied before and got money, you could still apply again. Okay, so definitely look out for it. It is a forgivable loan if you use that money towards payroll, rent, interest on like mortgage payments, utilities, anything related to your business. It can be forgiven by the Small Business Administration. They're the SBA. They're responsible for forgiving those loans. Okay. So remember I said the stimulus check, you do not have to pay taxes on that. If you receive unemployment benefits, monies, and some people, did pretty well, like those first couple of months. If you lived in New York, you would have gotten up to maybe like the maximum amount of like $4,000 a month, $4,500 a month. If you got that for 6 months, I mean, you could have easily gotten over $25,000 a year. And if you did not adjust for that, you might be in a little trouble come tax time, okay? Because if you're, hi, whoever joined in. Hi, on Facebook. I don't know if you want to type in your name. That'll be great. Because I can't see the name on StreamYard. But yeah, so if you got unemployment benefits, and depending on your standard deductions or dependent on, hi Veronica, hi, thanks for joining me. If you got unemployment benefits, and you do have to include that in your income, and you do have to pay taxes on that. Okay. Hopefully, between deductions or your standard deductions, you might be able to reduce that amount that's taxable, but it's included. It's definitely included. What else? So stimulus checks, not included. Unemployment included in your taxable income. Okay, so 401k. So because of the CARES Act, again, you were able to take up to $100,000 from your 401k or 403b. You were able to take up to $100,000. Usually the max was 50, but you were able to take up to $100,000 without any penalty. So normally, if you withdraw money, like a hardship withdrawal from your 401k, your tax deferred retirement account, if you take money from that and you are younger than 59 and a half, you would have to pay not only taxes on the money that you took out. So say you took the max out in prior years of $50,000, you would have to pay taxes on that 50 grand. You'd also have to pay a tax penalty of 10% on whatever monies you took out. So say you took out, say you took out the max of $50,000, you would have had to pay 10% on that. That's $5,000 extra in taxes. That's the penalty, plus whatever money, and then you have to pay taxes, regular taxes on the amount that you took out. So if your income, just for numbers' sake, simplicity's sake, if you took out $50,000 and your tax rate is 30, that's an additional $15,000 you would have had to pay on that money you withdrew, plus the penalty. So that's extra 20 grand in taxes. That's if you took the maximum amount. Well, with the CARES Act from last year, you only just pay taxes on the amount that you took out. And I believe that if Yes, if you took that money out, you have 3 years to put that money back. You have 3 years. Again, talk to your CPA. And I say CPA because CPAs, hi, Colleen, happy birthday. Thanks for joining me on IG. So yes, important if you took out money because things were getting a little rough and you needed some extra fund and you had it there. Hey, you do what you have to do. There are going to be some people that say, no, you never take out money out of your retirement. But you know what? Hi, you did not know this. Oh, yes, Dr. Marissa. Yes. If you took money out of your 401k, it was under the CARES Act. You did not have to pay penalty on it. It's supposed to be related to corona-related expenses, but like say if you're unemployed or you lost your job or you were furloughed and you needed money to pay rent or to live, and you had, substantial amount of money in your 401k, they allowed you to take that money up to $100,000, no penalty, right? Yeah. So yeah, I mean, you're gonna hear people say that, but yeah. So definitely speak to your accountant about that. If you did that, Marissa, I think it might still be the case. Again, check. I don't know if there was a time limit on that. Let me see. The CARES Act up until the end of 2020. So the deadline was the end of December 31st, 2020. You had that option. No early withdrawal penalty of 10% for those who are under 59 and a half years of age. I don't think you have that option now unless they extend it under this new, they're in Congress, they're working on a new stimulus package. So they may extend this. Just to recap, if you have student loans, pause was extended to September 30th of 2021. So that means from April of last year to April 2021 of this year, you did not have to pay loan. You didn't have to make payments on your school loans, which is great, because if you are in a good position and you don't have any money issues, or you have your debt is low, you have your emergency fund, you're still working, that any payments that you made against that student loan balance goes directly to principal. Okay, directly to principal. When you go into your student loan account, if it's direct loans, if they're federally, if they are direct loans, if they're federal loans, if you like have private loans, I don't think it works. I don't think those qualify. But if they're federal loans, like direct loans, those sort of things, you are your student loans was on pause. No interest was charged on those balances, which means that no interest was capitalized. So your balance stayed zero if you did not make any payment. Zero. All right. So that money you could use for building up your emergency fund, paying down debt. I used it for some much needed house improvement. My house needed some stuff done. So that's what I used mine for. So yes. I'm going off track, but I just wanted to let you guys know that, the moratorium on evictions, rent, mortgage, that's been extended to June 30th. That just came out. Okay. So if you know anybody, because some people, I feel bad. I used to be a landlord. Okay. So I understand both sides. If you're a landlord, you still have your property, you still got to make more, your mortgage payment. And if you're not collecting rent, that can put you in a bind. So I understand both sides, but hopefully both sides can take advantage of this. If you are a tenant and you cannot afford to pay your rent, or if you're a homeowner and you can't afford to pay your mortgage, there's a stay on foreclosures and evictions, and hopefully the landlord can take advantage of this too. Dr. Marissa, let me see. I've been making payments. Okay, right. But I mean, Dr. Marissa, that's great because your balance are going down. Your balance is going down, so that's good. But like if you need money to do something else without you being really penalized, that's great. Use it. You have up into September. It's February, so February, March, April, May, June, July, August, September. That's 8 months that you can use, and without taking out an additional loan or it causing problems somewhere else. So definitely think about it. All right. So rent, mortgage, the moratorium on that, eviction, foreclosures extended to June 30th, student loan pause is extended to September 30th. And they're working on a new stimulus package. If you get a stimulus check, you may get an additional $1,400, even though it might be a little different. There might be some income limitations. So we'll see what the new package, and once it comes out, of course, I'm going to talk about it. Right? Okay, so that's the big thing with 401ks. Yeah, I think that's it. It's pretty a quiet tax year. Oh, here's something for educators. Teachers and other educators can deduct unreimbursed expenses for PPE and other items used for COVID, to prevent COVID spread in the classroom. So that's great. If you're a teacher and you spent a lot of money, trying to keep your classroom safe, you can deduct those expenses. But that's pretty much on the tax front, I think. I mean, there's other stuff, but the main stuff, the main stuff that everyone, the general public is going to be concerned about. But again, talk to your CPA. I highly recommend CPAs. You can do your own taxes. That's fine if it's and for staffing agencies, I don't know, because when we had that big tax overhaul in 2017 that affected us in 2018, I forget the year. Let me look it up. When we had that big tax overhaul, I'm looking at was it 2017 or 2018? I don't remember. I'm like working while I'm talking to you. I think it was 2018. It was 2018. Yeah, it was 2018. But anyway, I bought lots of PPE for your nurses. I don't know. It just, Veronica, it said teachers, because with the last tax, well, you know what? That might be considered a business expense, though. Veronica, that might be a business expense. So it might be different, like office and like supplies. So talk to your accountant. Because what changed in that last big overhaul is that if you had like unreimbursed business expenses, like say you're employed and you paid for a conference out of your money, or you paid for a meal, but you're an employee, you couldn't deduct those. That was a big change. You couldn't, those were like unreimbursed business expenses. You just had to eat that money up. If you didn't get it reimbursed by employer, you were out of luck. So Veronica, I think that might be considered business. That's your agency. That might be considered a business expense. So it might be different. But a teacher is a little different. A lot of times they pay for a lot of things out of their pocket. And now, they can't really deduct it. So Anyway, so yes, so make sure you get your taxes in. I mean, you could always file for an extension, of course. If you owe money, try and pay it. If you can't pay it, the tax IRS do set up, they set up payment plans. Key is to stay on top of it, because the last thing you need is the IRS on your butt. You do not want that. Okay. So if you get in the habit of, throwing bills out or not taking calls from business, like bill collectors and stuff, don't do that with the IRS. So I know like that unemployment may hit people, hard, maybe, depending on what they can reduce that money by. But if you got a lot of money from unemployment, and say you can be, someone else files for you or something like that, like you could be claimed as a dependent on someone else's account, taxes, and you got unemployment, you may be in some trouble, and if you didn't put money aside. Okay, so that might come as a shock, but the stimulus check that is not taxable. So if you got that, you didn't have to pay taxes on it. All right. Well, anyway, guys, so I think that's it. Make sure you file your taxes on time. Confer with a CPA, certified public accountant, because they're supposed to be up and up on all new tax changes. Like I said, I used to be a former accountant. I have my MBA in taxation, but I have a certified public accountant. I do not play because I am no longer in that game. All right, guys. So have a great week. If they pass a stimulus package, I will be right here to walk you through it. And of course, if you ever want a consultation or anything, feel free to reach out to me. You can email me at Dr. Randi at Dr. Randi B, MD, or you can access me, contact me through my website at drrandibmd.com. All right. I have some great things. I have a challenge coming up. Okay. You're going to get more information on that. It will be March 15th through the 19th. It's the New Year's. I know New Year's was January, but it's still the New Year. We're still in the first quarter. So it's going to be the New Year's Financial Cleanse Challenge. I'm so excited about this. You'll just, stay tuned. Follow me on all social media at Dr. Randi B, MD to get more information, guys. All right. Take care, and I will see you next week. Bye.